Over thousands of years, the currency used for trade has changed. First, people used seashells, then gold coins, and today we use paper money, what we call fiat currency. Now, the next step in this evolution is potentially something called the central bank digital currency, or CBDC, which is referred to as the digital dollar in the United States. CBDC is something that can often be very confusing because most people wonder how is it different from the digital money in their bank account. Secondly, how CBDC is different from cryptocurrencies like Bitcoin. In this video, we'll learn how CBDC works and what makes it different from regular digital money or cryptocurrencies. We'll also learn about what are the benefits, risks, and challenges of using CBDC and talk about the future of the digital dollar in the United States. My name is Kanak and welcome back to my channel. If you want to learn more about such interesting topics from the world of finance, then subscribe to my channel. And your support is what keeps this channel running. So show your support by liking the video and dropping your thoughts in the comment section below. Alright, let us begin by understanding what central bank digital currency is. The official definition of CBDC says, a CBDC is a digital form of central bank money that is widely available to the general public. Central bank money refers to the money that is a liability of the central bank. While Americans have long held money predominantly in digital form, for example in bank accounts, payment apps, or through online transactions, a CBDC would differ from existing digital money available to the general public because a CBDC would be a liability of the Federal Reserve and not of a commercial bank. Let's unpack this definition. When you put $1,000 into your online bank account, then the bank takes responsibility for giving you that money back when you want to withdraw it or spend it. That money is not the responsibility of the Federal Reserve, which is the central bank of the United States. But with a central bank digital currency, which is otherwise called digital dollar, the Federal Reserve is responsible for giving you back your money whenever you want to withdraw it or spend it. Now you might wonder how this change of liability affects you. When you keep your money in an online bank account of a commercial bank like Bank of America, there are two big risks that you face. First, there is credit risk. This means if people who borrowed money from Bank of America can't pay it back, Bank of America might not have enough money to give you back your own money. Second, there is liquidity risk. This means there might be a time when Bank of America does not have enough cash on hand to give you your money back when you want it. But with CBDC, since the Federal Reserve owes you the money directly, there is no credit or liquidity risk for your money. The reason there is risk with commercial bank is because they use your deposit money to lend or invest at higher interest rates and make a profit. A recent example of depositors not being able to withdraw their own money from the bank happened with Silicon Valley Bank. Now, to avoid the credit risk or liquidity risk, the commercial banks in the United States are protected by FDIC insurance. This insurance helps protect depositors if the bank cannot pay them back. But with CBDC, there won't be any need for FDIC insurance because the money is owed directly by the Federal Reserve. Today, cash in your wallet is the only money that is a direct liability of the central bank and available to everyone. With cash, you don't have to worry about someone not paying you back or not having access to your money when you need it. CBDC will be like digital cash, issued and owed directly by the Federal Reserve. The second big question many people have is how CBDC is different from cryptocurrencies. Cryptocurrencies like Bitcoin use a distributed ledger, while CBDCs will have a centralized ledger owned by the Federal Reserve. Let me make this very simple. With cryptocurrencies, when a person A pays $100 to person B, this transaction record is stored simultaneously on multiple servers across the internet. There is no centralized authority keeping track of how much money person A has, what they have paid to person B, or how much money person B has. But with CBDC, the central bank of the country is the centralized authority that keeps all the records. They keep track of every CBDC issued and every transaction using the CBDC. In a nutshell, in case of cryptocurrency, there is no central authority, whereas in case of CBDC, the central bank is the central authority that tracks every transaction. Now let us talk about the good and not so good side of CBDC. The biggest benefit of CBDC is that it can lower transaction cost and make transaction faster. When you use your credit card or any other digital payment method, you might not see the transaction cost directly because it's the seller who pays it. These costs can be as much as 2% for local transactions and up to 5% for international ones. Businesses usually don't pay these costs themselves. Instead, they pass them on to the consumers like us. So current transaction costs can make things more expensive for consumers by around 2 to 5%. With CBDC, these transaction costs will go down, which will make things cheaper for consumers like us. Secondly, today, businesses don't receive money into their bank account instantly after a transaction, but instead it can take up to a few days. That's because of the way the network of banks settle transactions with each other. But with CBDC, because the Federal Reserve is the central authority keeping track of everything, transactions could settle right away at the time of the transaction. This will reduce the transaction time and provide businesses access to their money instantly. Third big benefit of CBDCs for the central bank is that it gives them more control over monetary policy. This benefit is up for debate, and the results are not very clear. But basically, it means the central bank can choose to speed up or slow down the economy by changing the interest it pays on CBDCs. However, there is a downside to paying interest on CBDCs. It could make borrowing money more expensive. If people can earn interest on their CBDCs, commercial banks might have to offer higher interest rates to attract depositors. This could raise borrowing costs for businesses and slow down economic growth. So while it may give more control over the economy, it could also end up slowing it down. Now let's talk about the fourth benefit of CBDCs for the government. It can make it easier and faster to track illegal activities like financing terrorism, money laundering, and drug trafficking. This is because the Federal Reserve will have a central record of all transactions, which makes it simpler to spot illegal activities. However, this also brings concerns about privacy, which is one of the biggest criticisms of CBDC. Many people worry that with CBDC, they'll lose their privacy and the central bank will have total control over their financial lives. Another major concern about CBDCs is how the central bank will ensure the technology is safe and secure for everyone. Specifically, people worry about the risks like cyber attacks, fraud, and theft, and wonder how central banks will handle these challenges. Now let us talk about the next important question. How close is the US to launching a digital dollar? The Federal Reserve has not made a conclusive decision yet on launching of CBDC or when it might happen. Right now, they are still testing out the technology, engaging in various experiments with hypothetical CBDCs, analyzing the benefits and drawbacks, and trying to figure out how CBDCs might affect the economy in the short term and long term. The Federal Reserve is also listening to what the people have to say about it. And before the launch of the digital dollar, the Federal Reserve wants to be sure that the benefits of CBDCs outweigh the risks and drawbacks. However, some countries like Bahamas, Jamaica, and Nigeria have already introduced CBDCs. The early results from these countries could help the Federal Reserve make the right decision about launching of CBDC. Now, if you are interested in learning more about CBDCs, I've included a link to an article from the Federal Reserve itself. It can give you a deeper understanding of the topic. I hope you found this video helpful, and let me know your thoughts in the comment section below. Thank you.